Hi, this is Mark with Ease Investing. I want to do a quick update on my SoFi position. This is a $30 put that I have sold on SoFi, and we can see that the stock price is down to $26.99. So that is well below my $30 put. I got paid to do this position $1.95. So my break even on the SoFi stock price is $28.05. Most likely, this put will be assigned to me today. We can see that the expiration date is October 10th, and we can see that it's below $30 and it's going to close below $30 since the stock's at $26.99. So what will I do once I receive the shares of this put? We can see that my average cost will be $28.05, and we can see that the stock price is below that at $27 right now and 1 cent. What I'm going to do is run the wheel strategy on this. So after today, when the market closes, I will own 1,800 shares, because each contract's 100 shares of SoFi, and my average price will be $28.05. Now keep in mind that break-even price, $28.05. So what are some things I can do? What I'm going to do when I own those shares is, if you click trade, view all positions, I can now sell calls on this position. SoFi earnings are at the end of October, so if I did October 31st, there is going to be a good amount of premium in this. So if I go ahead and remember, my break-even price is $28.05. So if I sold this call for $28.05, expiring October 31st, I would get a credit of $1.78. Let's move out one more week and see what that does. So if I sell this call for $28.50, that's going to be 45 cents above my share price, my average cost. So I'll already be up, if it hit this for their earnings, I would already be up by 45 cents per share of SoFi. But by doing this contract, it's about $2. So let's say the price didn't increase with the earnings, and it went down or stayed the same. Remember how my break-even price was $28.05? If I went ahead and did this contract, I would be receiving about $2 per contract. So that would bring down my break-even price from $28.05 to $26 and roughly 5 cents, give or take 2 cents. So that's why selling puts to get into positions and then selling calls to get out of positions is so valuable, is because your break-even price continues to go down. If I were to do this, my break-even price would be down to $26.05, which is a win compared to if I just went ahead and bought these shares at first. That is the wheel strategy, and that's what my plan is to do once I receive these shares on SoFi, is to sell a call on it. And the reason why I would do that is because that would bring down my break-even price more, and I could continue to do that and continue to bring down my break-even price. Hope this video was helpful on the wheel strategy and on the power of selling puts and selling calls to get into positions. If you have any questions, leave them in the comment box. Please like and subscribe.